Hey guys, welcome back to the channel. Hope everybody's doing well today. Today we are looking at a broad market ETF. You know, when everybody says just be the market, this is the market. Okay. And, I know we do a lot of dividend ETFs here and things like that, but there's something to be said about participating in the total momentum or energy or economy of the U.S. stock market, right? Perfect for people that are totally passive, just want to put it in their account and forget about it, just put it on an automatic investment and put money into it and let it ride for decades and decades. This is the type of investment for you. So, if you're new to the channel, please consider subscribing, comment down below, like, share, all that stuff. We do a lot of ETF research. I research income investing, focused on dividends mostly. If that's something you're interested in, please subscribe. I'd appreciate it. Also, in a pinned comment down below is my Amazon link. What this is if you like what I do here and you appreciate it, want to send me a tip, you can use that Amazon link at no cost to you. So if you use that link and you complete your shopping session, you can buy whatever you want, not what it's linked to. But as long as you go through that link and complete a shopping session, I get a small commission from qualified purchases from Amazon. So it's a great way to say thank you, and I'd appreciate it if you'd use it. And you guys are the best that have been doing it. I love it. So what are we talking about today? Today we are talking about ITOT. It's the iShares Trust S&P Total Market ETF. And what this does is it has a benchmark of the S&P Total Market Index. And another ETF that is extremely similar to this is Vanguard's VTI. And so for the most part, they interchange, even though they say they track different indexes. It is probably 96-98% the same. Okay, so Vanguard VTI, iShares ITOT, pretty much what I'm doing in this video will cross over to each other. Okay, so what we'll do is we'll look at the index that the ITOT follows, and it is let's go to portfolio composition because I wanted to show you this here. It's the S&P Total Market Index, which is comprised of the common equities included in the S&P 500 and the S&P Completion Index. Okay, so we go here and we'll look. The S&P Total Market Index. The index is a broad market index and includes all eligible U.S. common equities. And then we'll come down here to the Completion Index. And this is the index is a sub-index of the S&P Total Market Index and measures the performance of all constituents in the S&P Total Market Index that are not also constituents of the S&P 500. So it just expands it out to the total stock market, total U.S. stock market, which consists of about 3,500 companies, roughly. So we'll come down here and we'll take a look at some of the eligibility criteria. Only common stocks of U.S. companies are eligible. For index purposes, a U.S. company has the following characteristics. Basically, files 10K reports, and primary listing must be on a U.S. exchange. The issuing company must have the following organizational structure. They can be corporations, which include equity and mortgage REITs, and common stocks. Ineligible to be put in this index are this list right here. I'll go over a few of them. Business development companies, limited partnerships, master limited partnerships, LLCs, closed-end funds, ETFs, a bunch of different trusts and bonds and ADRs and things of that nature. Also, they are eligible if they have multiple share class structures. So some companies have Class A shares and Class B shares. For example, Google has two share classes, and also Berkshire. Berkshire, I believe, has basically two share classes. So those are eligible. The S&P Total Market Index. There is no minimum market cap requirement for index eligibility. Liquidity, they have to be liquid, must be at least 0.10. Financial viability, eligibility differs depending on the index. S&P Total Market Index, there is no financial viability requirement for index eligibility. So essentially, when you're buying the total market, you are buying all the best and all the worst, and you're getting an average of everything, right? So, but the good thing about it is these are market cap weighted. So the more popular or the more profitable, more valuable companies will get the higher weighting in the index. So you'll always be weighted top heavy on the best of the best, if that makes sense. I think that's all I wanted to put in here. There's all kinds of different calculations and stuff they put in there, but basically it's a market cap weighted of the total U.S. stock market, with the best getting the highest weighting. There's no financial screens, none of that. If you're a U.S. company, basically you are included in the index. So let's take a look at it here. We'll go back here to my Fidelity site, and we will see the top 10 holdings. Like I said, they get the heaviest. It has a total of 3,517 holdings, with the top 10 getting 23.46% of that, with the other 3,507 getting 76.54%. And your top 10 is all the heavy hitters, right? Apple at 5.5, Microsoft just under 5, Amazon at 4, Facebook at 2, both shares of Google get about, 2.6, 2.7, Berkshire at 1.2, Johnson & Johnson at 1.2, Procter & Gamble at 1, and Visa at 1. So all the heavy hitters in the United States are going to comprise of your top 10. And your country exposure, 97% is in the United States, even though it's probably because some of our U.S. companies have international exposure as well. So that's probably where this, I don't understand. It's a U.S. total stock market, but then we got all this other stuff in here. Now, sector exposure, information technology, you're going to have 26%. Healthcare at just under 14%. Consumer discretionary at just under 12%. Financials at 10%. Communications services just under 10%. Industrials at about 8%. Consumer staples at about 6.5%. Real estate at 3%. Materials just under 3%. Utilities just under 3%. And energy at 2%. So we'll look at it because it's a total market. You got large cap at 79%, mid cap at 11.5%, small cap at just under 6%, and micro cap at 3%. And Morningstar rates this as a large cap blend. So we'll go over here to the key stats, and we'll check out turnover ratio, which I like to look at, and this should be very low. And yes, annual turnover ratio for ITOT is 4%. I'll start throwing this trailing earnings in here too, just to give some perspective. Price to earnings average over the total stock market is 26.49. So yes, it's a little hot, but I believe as long as interest rates stay low, our price to earnings ratios are going to stay elevated. So let's take a look at the dividends. Now, I'm in Seeking Alpha, and I don't know. Seeking Alpha has been a little weird lately. Some of you that have used it probably have noticed that some of their stats might be a little off. And because we look at here at ITOT, and it shows a dividend yield of 1.47%, 5-year growth rate of 11.17%, and dividend growth of 10 years. But if we look at VTI, which is basically the same thing, you got a dividend yield of 1.66, 5-year growth rate of 9.22%, and the dividend growth of 10 years. So let's take a look at both of those, and we'll see how that looks as far as growth is concerned. ITOT will go to the dividend growth. Now it shows a 1-year growth rate of 30.39%. I don't know if I'm buying that, but if we look at the 10-year growth rate, 11.39%, really strong dividend growth rate. So all you dividend growth investors that think like the total market is not for you, the dividends do grow very nicely in these ETFs. So we'll look over at VTI as well. We'll look at the dividend growth. And this seems more like it to me because it's got a 1% or a 1-year growth rate of 5.25%, 10-year growth rate of 10.13%. I think that's about right. I think we could expect a 10% growth rate going forward. We might slow down here in the next year or two, but I think long term, I think you'll probably be in that range. Okay, and now to look, I haven't done this, but I wanted to show you that VTI and ITOT is basically the same. I'll go over here to my ETF overlap tool, and we'll punch in VTI, and then fund number 2 is ITOT, and we'll put find overlap. And if you're interested in this tool, I'll leave a link down below to this tool. It's a pretty nice tool to find out whether your ETFs are overlapping each other a little much, or if you prefer the overlap. But you just click that, and it'll show you, it'll calculate all the holdings, and it says right there 3,245 number of overlapping holdings. So they are about 95% the same. So almost 97% of VTI's 3494 holdings are also in ITOT, and then 94% of ITOT's 3532 holdings are also in VTI. So you wouldn't want to probably hold both of these at the same time. You just choose one, and since they're so similar, you'll probably make similar returns. And we'll now check returns, and we'll go to my ETF channel, and I've got the ITOT already up here. We're going to check for 10-year performance. So today's date is September 13th as I'm recording this, and so we'll just do 10 years, and we're going to compare it to VTI just to show you that they pretty much are the same. You can buy either one, and then we'll look at it versus the S&P 500. So the VTI and the ITOT were pretty much a dead heat, where ITOT average total return of 13.63 and VTI at 13.59. So just a hair difference, and it's not really that big of a deal. So we'll look at it versus the S&P 500. And even there, you're looking at the S&P 500 edged out the total stock market by just a small margin. You look at average annual return over the past 10 years of 13.63 for ITOT, and versus the S&P 500 of 13.75%. So the argument is by VOO, which is just the S&P 500. But if you like to be a little bit more diversified, you can buy an ITOT or a VTI and get that extra 3,000 holdings that they have, and you'll get pretty much similar results The other thing about VTI is it's been through a recession, so you can almost flip a coin and land in any of those, and you'll probably be fined as a core holding that you can invest in. Set up an automatic deposit and just deposit it and let it grow for decades, and you'll participate in the economy or the growth of the economy in the U.S. stock market. So I hope you enjoyed this review of ITOT. VTI is very similar. If you enjoyed this content, please give me a like, share, subscribe, all that good stuff. Use that Amazon link if you would, please. I'd appreciate it. You guys have a great rest of your week, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.